Hello everybody, Stockguy22 here. Wanted to review some charts today on the markets. Today I had posted on Twitter that we were doing some nice double bottom action. NASDAQ was coming into the 200-day as well as the S&P. ES had done a triple bottom. So I wanted to show you some of this bottoming action that I was seeing and why I thought it was interesting going into the next few days. So let's first start with the Dow. So let's look at this chart first. Okay, as you can see, nice action on the last few days. Okay, this is what I was talking about the double bottom. We're still well below the 200-day, as you can see. Okay, last video that we had done a while back, if you remember, I was saying we were coming into some key resistance, so hopefully you took some positions off as we got into the end of April there. Okay, same area that we were hitting into the same resistance point. We went slightly above, but then retraced right back down. So it's been a pretty steep fall, as you can see, and this point right here is the 200-day that we had broken through, 200-day SMA. So right now, this is what I was talking about, the double bottom action. So we were just slightly above 12,000, as you can see, which should have been a major support area anyway. Now, if we do get a bounce, we should go up towards that 12,263 and then about 12,500, okay? Until we break through 12,600, which is right about here, okay? We could have a really nice bounce action from here. This is the area we want to watch though, right around this 200-day as we do bounce back. But I was waiting for some nice bottoming out action before I commit some more dollars to the market. Okay, and I thought yesterday was setting up quite nicely across the board. Okay, so perfect resistance up here, as you can see. It's almost like a nice triple top that we had, and then we fell right back. Okay, so that's for the Dow. Let's look at the NASDAQ. Just move that up so we can see all the right dates. Okay, so again, very similar. Slightly different that we didn't go up to resistance into the beginning of May there, end of April, beginning of May. And I'll show you on the chart here. So you can see what I was saying on Twitter yesterday, that the NASDAQ came back over the 200-day. Okay, so instead of doing a double bottom, it sort of did a retrace back up over the 200-day. So we went slightly below the day before, and now we're pushing back up. Okay, very similar on this in terms of like levels to the upside above the 200-day. I think is a good sign. Okay, just under this 2,900, as you can see, that's where we had resistance right at the end of May as well. Okay, we were starting to push back up, then we retraced again. So it did like a little upside down bowl shape. Okay, here I'll see if I can show you that. And sometimes when you get that, you do break down. Okay, so you can see how that was, that we pushed right back up and then fell a little bit lower, but the 200-day so far has been pretty nice support. Okay, so right around this 2750 area, we closed slightly higher yesterday, which is a good sign. Okay, now what we want to do is try to push up towards 28 and then 2850 to 2900. Okay, but as you can see here, we didn't quite get the triple top as the Dow did. Okay, we sort of did a double top, came back up slightly above the this pink line is the 50-day. This is the 20-day, the red one. So we went slightly above that, retraced right back down very quickly. Okay, so that was sort of our resistance area right above this point here. Okay, and you can see same type of pattern here that happened with that upside down bowl shape right in here. Fell back below that 2,900, and we hit new lows down there. Okay, new recent lows. Okay, so I wanted to make sure I show you that, so you know what I'm looking at in terms of like that we were at support. So as we were into resistance into that March-April time, okay, now we're coming into support area. So it's a really big retrace that we had. So I thought technically alone, we should really bounce back, okay? Even if no other news comes out. We know there's a lot of news for the rest of the week that's coming up, and that's could be a catalyst that could push the markets back up. Okay? I think they could turn very quickly on a dime and start to come up. That's why positioning ourselves would be pretty good timing, I thought, right around this point down here. So let's watch into Wednesday and Thursday. Should really tell us, give us a better signal of if we are continuing up. I think we will, based on the charts, but let's first get some confirmation tomorrow. If we do, I'd be ready to commit some money into the markets. Okay, so let's look at the SPY. SPY as well, as you can see here, came back up over the 200-day. Okay, so again, very similar, pretty well matching into the those Dow and Nasdaq charts. Okay, more so the Dow, as you can see, obviously, because we almost did that triple top action. Okay, right into here. Oops, gotta go back to the solid line. Okay, so that 142 sort of gave us a nice resistance area right into here, into here, into here. Okay, once we fell back under these 20-day and 50-day lines, you can see how we retrace right back. Same type of upside down bull shape pattern that continued further down. Okay, we had the same thing here into the end of May, and now is where we started to bottom out. So I was actually watching this level into the 200-day. So as you can see, that 128, 129, very key right now. If we started to push up above that 130, would be really good. Expect 132 to 134 initially, then 136, and further up 142. So to me, this is a pretty good sign. I'll show you how I usually do it on these type of analysis to try and see where we can go up to. Okay, and it's pretty easy on all of them to just do some fib retraces. So let me show you how you do that. You just take the recent high down to the recent low. Okay, move that over a bit, and as you can see, I can pretty well eyeball the levels. That's why I said that 132, 134, and further up 136. You can see how they match up quite nicely too sometimes with the moving averages. Okay, so to me that would be a good sign, and it would be a natural bounce point as well using the fib levels. So okay, so 132, 134 if you do trade the SPY, or if you do options on it. Okay, that would be what you'd be looking at. Other one I wanted to review was oil. We had that major drop on oil. Okay, very similar to the markets that we dropped right back. You can see up around these levels was when oil was up over that 110 area, 105 through 110, and it was when all that scary stuff about Iran, that there could be a war with them, and then we'd come back one night and oil would rally right back. I was short during that period of time. Once we sold off, I actually closed out my position because I thought with oil, I didn't want to get chopped around within that 105 to 110 area. And I thought until we break out of that range, I didn't want to trade oil again. So I actually had stayed out of it. Recently, I got back in, and I trade UCO when I do get in. You can see same type of action here, that we had a nice triple bottom action, held really nice above that 26, 27. 28's been resistance for us. Okay, we can't seem to quite break it the last 3 days. But once we do, we got that gap from last week. Okay, that would take us up to almost 29 and then 30. Okay, so I thought this drop was pretty steep. This is actually a really good sign. Okay, so this is oil dropping back to this low 80s area. Okay, to me that's a good sign, because what do you have at that point? You got lower gas price at the pump, you got lower oil, which should help companies overall, especially transportation companies. It's going to help the airlines, it's going to help the individual consumer, because they're spending less. So you guys are finding that you're spending less in gas at the pumps. That's going to translate to more money being spent on other stuff, or at least money that you can save. Okay, so that's one thing that hasn't really been talked about. So I thought, for the economy to get better, oil's got to go up, okay, because people will spend more, and prices go up with that. So really, I thought that's a good sign that we've dropped so much, and we haven't even considered that. We're just looking at Europe as the main catalyst right now, till at least those Greek elections, June 17th. Okay, so keep that in mind. Going into June, I think we can get a nice push up on oil. If we do, I'm expecting us to break through that 85 and then go up towards 90 to 100 again. We don't even have to hit back up to 110. So in turn, this UCO will push up too. So if I can get up towards that 33 to 40, I can make some really good money on this. And recently I doubled up on it on the dip. I started last week to add more to it, to UCO, and I doubled up early this week on it. Okay, just because we had dropped right back so far. So right now we need a nice push back up. So that's for oil. Here on DGP is how I trade gold, and we've had a nice push up on gold. Okay, coming into some resistance right now. Okay, very similar. If you see on gold, we were just above that 1600 area, and I felt pretty good about this because I added on the dips as well on this. So I've got this one and a play on the miners as well, the gold miners. So this has actually come back nicely. We're into resistance, but I still think we can go a bit higher on that as well because we had such a big drop on gold from the higher levels. Now, a couple of stocks I wanted to review that a lot of people always ask me about and that I'm trading right now. Here's Apple, and I actually had the fib levels already in there. I actually like the setup on it. Some people are asking me why I thought it was going to continue to go higher. You can see a nice little cup and handle formation. If you actually search what a cup and handle is, you'll see that we're sort of setting up one right here. Okay, not quite a bowl shape that we want, but it's almost like a nice V shape. We actually came back almost perfectly on Apple on this last bounce, and I'll show you on here. Right to the 50% retrace point. So that was based on the recent high, just before the earnings there, and that recent low in May. Okay, we thought we could hit, if you remember, this 536, 538 area was the area that we were looking for. We went slightly below, which happens a lot of times, and then we bounced quite nicely. So we made some really good money in our chat playing the options on Apple the past number of weeks. Not as great last week, but we're still profitable. But the week before, we did really good on that bounce. And we did good as it was dropping as well, because we were looking into this key level as a support point. Okay, a lot of people didn't think it'd go down that far. If it continued, we actually could have gone to 500, and we would have kept our strategy going short for the following week. Once we saw it bottomed out, we went long. Okay, but you can see here, perfect bounce right to the 50% retrace, drop back a bit, hovering around the 20-day right now. That's why I thought that was a good sign. The day before, we dropped back a little bit further towards that 550, came right back up. So this pattern that I'm talking about, let's see if I can do it on here. It takes just a little bit of so not quite a little cup and handle, but pretty close. And whenever you get one of these with a little handle here, okay, so you'd have to use your imagination here, how it looks like a cup and handle. Whenever you have that, you usually get another push right back up, okay, which I thought our next push could take us well over 580, 590. 600 is going to be a natural resistance. Okay, you can see that also takes us up to the 61%. So whenever you get that, you'll get like a push right back up. Okay, whenever you get this cup and handle. And as we know, over that level, 600 is going to be a natural resistance, but I thought at least to take us up towards the 50-day initially. And when Apple does retrace, it usually is pretty quick. It's been acting really strange the last few months, as you can see. Okay, we usually don't get this long of a drop, especially when the numbers were so good the last time around. Okay, And we know other stuff is coming up, probably the iPad mini, the Apple TV further out into the end of the year, when it should get announced, and then probably production the following spring there, okay, or at least into early 2013. So to me, those are all good things that could happen. I would hate to chase Apple. On my position, I'm actually still down on it. I need just over 600 to make some money on it, but I've been trading the options during this time while it's basing out. So rather than taking any one side to just go long, we've been going long and short with our options. Okay, so it's actually worked quite nicely, but we're expecting a bigger push up. If we can get above that 580, would be fantastic. Okay, so that's for Apple. And let me just quickly review Facebook. As you can see, it's been a major downtrend. I think if it does, I know a lot of people are waiting for that 25 area, and I actually started a few days ago at that just over 27. I thought that was a pretty good spot. This is why I did. It looked like it was bottoming out with the with last week's action. Okay, we had a nice hammer in between. Should have really continued above 30, but a lot of valuations that have been put on it bring it as low as 13 to people starting to get interested at 25. What I did was I started a position, but only half a batch. Okay, and the reason why, this is what I was thinking about when I did get in, the fact that if we did bounce up, we could easily go up. I went very conservative towards 30, but you could go up to just at a fib level is around 33. It's still well below the IPO day when it hit size 45, and it started out there at 38. Okay, so I thought it could bounce up. I left some room just in case it went to 25. Okay, since everybody's expecting that 25, I thought maybe it might hit, maybe it might not. But you're going to get some people starting to buy it at 25 from some of the articles that I had read about it. As you can see, yesterday we closed weak under 26. Like to see it back over 26 and at least test into 27 again. That'll bring me back to about even. But I was willing to add more into 25 with a stop under that point. Okay, because if it dropped 25, it's probably going to go to 20. Okay. Now, I've played a lot of different IPOs the past few years, and the ones that tend to sell off below the IPO price do tend to bounce up, and usually after a few weeks of settling. In this case, there's been so much news on it, and so many people upset, the average investor getting hit on it. I thought it could still bounce up, especially once we get into this quiet period. Lockup period I'd be concerned about because you'll get a lot of people selling that off again there. But I really thought it could do a bounce in between that time. Okay, so that's actually what I'd be looking at. I'd be selling into 32 to 33. Okay, size maybe 34, but 30 to 33 is where I thought we could bounce up. Okay, so again, I'm watching for 25 to see if it holds. If we go further down and go into 25, I'd add a bit more and then see if we can get a bounce even to 28 to 30. So then I don't need as much. Okay, but I'm just over that 27 area where I got in. Okay, and as you can see, the volume's starting to lighten up compared to what it was the first 3 sessions, which was just insane. You got a lot of double orders and brokers that had trades that they didn't know about. So it was a complete mess, but I was thinking that if it did bounce up, we can get a nice fib retrace point. So on the current level, we'll be looking at, if we did bottom out into tomorrow or the next day, we'd be still looking at 33 to 35 for the fib retrace. Since it's been so weak, I would go with the lower level, 38%, and even a bit lower. Okay, so using the recent resistance, which is just under 30, so 29 and change. So I could still make some good money on it. But again, be cautious. It is a little bit higher risk considering what happened on this. Okay, but it's not going to continue straight down completely. I doubt it goes to 13 to base it on what the other companies are trading at. I know there was a lot of comparisons about that, but they still have a lot of opportunity with the mobile market and advertising. So I doubt it's completely out right now, and they've survived till now. So we'll see how it works out. But look for a bounce on this. And I think if it does, people are going to start to chase it. You're going to get the people that have been short on it to try and close out, especially if it breaks through that 30. That would be a pretty psychological level. Okay, so in a way, having that many shorts on is a good thing when a stock starts to retrace, because you get the shorts to start to panic cover. Okay, especially at key levels. So that's about it, guys. Hope you enjoyed this quick little recap. So again, just to let you know that the markets, to me, we're starting to bottom out with double bottoms back over the 200-day for the NASDAQ and for the SPY coming into the 200-day yesterday. Okay, and with oil also triple bottoming, as you can see there. Okay, break above 28 would be really nice, but that would be oil having to break through 85 and get up to like 86, 87. Then we can start breaking into this gap. Okay, so that's the stuff I'd be looking for into the going into the end of the week and into the following week. Okay, good luck. Hope you enjoyed this video.